Bring in star investor Scott Minerd. He's the Global Chief Investment Officer of Guggenheim Partners. Good evening to you, Scott. You've been relatively bearish about the economy come 2023, but I think you've been somewhat bullish, at least short term, on the markets. So what are you expecting from this election, and how do you think it's going to relate, therefore, to the market?
Well, Andrew, thank you for paying attention. I think that, look, divided government is a great outcome. I subscribe to the philosophy of Will Rogers, which is, I'm glad I don't get all the government that I pay for. And so, divided government is going to mean probably very little movement on the fiscal side, meaning we're not going to get tax cuts, nor are we going to get much increase in government spending. That's good from the standpoint of allowing the economy to cool off more, and may actually limit the amount of hiking that the Fed has to do. But history shows us that after the midterm election, even when the Fed is raising rates, we could expect for the next 6 months to see a pretty substantial rally, probably high single digits, mid double digits. And then the question will be next year in a recession. If we do get a recession, then every time we've had a midterm election where it's been followed by a recession in the next year, you get negative returns in the following year.
Well, that's what I was going to ask you. We keep talking about the statistic about how much the stock market moves in a positive direction historically after a midterm like this. And yet the question is really what happens on the other side. You're still bearish on the other side.
I am. I think that, look, I think we could get up to 4,100 on the S&P before we see some sort of a pullback. But, we're still in a long-term bear market. The downtrends are solidly in place. And, I think that the Fed is being more hawkish than it realizes. We have an unprecedented reduction in the money supply. Has not happened since the Great Depression. While at the same time, I think Powell's statements last Wednesday tell you that, they're going to do everything they have to in terms of raising rates until they see inflation break. But the forward indicators of inflation already are showing us that things are starting, inflationary pressures are abating.
Speak to the politics of this. If the Republicans do win, for example, one of the things that people expect is that the tax cuts that were put into place earlier may become permanent. Do you look at that and say that's a good thing long term? Do you say that's inflationary? That's a problem? I mean, how do you think about that?
Well, Andrew, I think I'm one of the last monetarists on the face of the earth. I believe inflation entirely is the result of monetary policy, but fiscal policy, is what determines what potential output is. And so, if we are reckless with fiscal policy, then it's going to damage long-term potential growth. And, in a number of areas of policy, for instance, immigration, we're not growing the workforce as fast as we need to. A hawkish stance on immigration over the next 2 years is going to be bad for long-term growth. And, it's going to make it, harder to get inflation to slow down. But, at the end of the day, the thing I think we're really fighting over here is the long-term potential of economic growth, not necessarily the rate of inflation.